Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants. This podcast is for entertainment purposes only and is strictly not intended as financial advice. Any opinions are general in nature and do not take into account your personal circumstances, needs, or objectives. Securities mentioned are for illustration purposes only, and this podcast should not influence investment decisions. You should read the relevant PDS and consider speaking to a financial advisor before making investment decisions. Past performance is no indicator of future returns. Podcast guests and their clients may hold positions in the securities discussed in this podcast. All right, we're live. We're coming from the heat of earnings season. Some of us may be sleep deprived, and we've got a lot going on. We'll keep this one fairly brief because I think we're running into other meetings and everything today. Yeah, gents, maybe we should start off. I'll start off with some good news that I think we chatted about midweek. You guys might have some as well. I think OpenAI's Sora model, I think, was pretty wild in terms of human progress development. So if you haven't seen it yet, well, you can't really play with it yet, I think, right? It's just a demo at the moment. I don't think they've got it available for anyone, but basically just using simple text prompts, generating an actual video up to a minute long. Some of them look incredible. Yeah, there's a lot of demos. You can go to the OpenAI website to see it. They are just wild stuff in terms of like the quality and kind of things that a lot of people had thought would be happening in like a year or 2 years from now. Happening already. Can still make a lot of errors. It doesn't understand physics properly. So OpenAI also showed all the times where it doesn't work, where it I think respawns like multiple dogs in the same place or something. But overall, I think directly incredible quick progress for something
mind blowing
that had been seemed years away.
Again, it was only a year or so ago we started this stuff even just really came to the public consciousness. I will say the best thing about it has been the very strong meme game around Sora. I know you're off Twitter/X at the moment, Matt, but there's been a lot of stuff where people just captioning real footage, of Zuckerberg, sort of a post-game sort of high five triumph. And so just looking really awkward and people just coming up with really funny prompts.
Wait, so they're creating it with Sora or they're just pretending that?
No, they've just put the clip there and then awkward tech geek or sort of intern tries to make himself useful or various different prompts that just fit the image so well. It's
that's
very
great.
good.
Yeah, I miss those memes. Yeah, what was the other thing? There's also been a lot of progress from Google's Gemini. They've now opened up, I think it's 1 million character context window. So the context window when you're talking to Chat GPT or any of the LLM, large language models, is kind of how much, it's kind of like the stored memory, kind of like the RAM memory of what they're thinking about. So if you feed it a lot of stuff, if it gets too big, then by the end, further down the conversation, it's kind of forgot what it was talking about at the start. So if you're trying to code a huge project or if you're trying to analyze a big corpus of data, that was quite limited. And now Google's basically coming out saying blowing the doors off the limits of it, saying that their Gemini will have 1 million limit and is going to be even bigger. And that can fit. There's one academic I was reading where it's everything he's ever published is being fed in. He fed it in and then said, tell me the themes, tell me some of the key ideas from this. Stuff that would have taken if you'd hired a researcher, days or weeks being done in a minute, basically, with Gemini. So, yeah.
But can I just say quietly, idea of losing the thread of your thought and conversation it's not an AI thing. I can attest to exactly that same problem.
Today.
Yeah, live example. Anyway, what was my point? Yeah.
What any other good news that you guys have seen around the traps?
Not that comes to mind. I definitely was following the Sora stuff very closely as well. That is super exciting. I'm continually blown away at the pace of things. Yeah. I mean, things in terms of the public consciousness, things don't. It's unable for things to be held there for long, and they sort of go unless you're intentionally trying to follow certain themes, they sort of slide off the agenda. But then if you ever sort of look back again, even months later, it's wow, that's a lot. You guys have been busy. A lot's been happening.
I saw some good news. Japan's trying to weigh in and get and garnish a bit more support for Ukraine. Obviously, with what's happening in America right now, Ukraine's in a really difficult situation with Russia pushing forward. So yeah, I guess to find the silver lining there, it's good to see other countries that have rule of law stepping up to try and defend the forces of an international rules-based order. I think we're very lucky that we've grown up in an era that was largely dominated by an international rules-based order. It's good for commerce, good for freedom, good for civil liberties, but of course very delicate because those regimes that don't care about all those things, they can be stronger and they can do crazier things. They can brainwash populations. They don't have freedom of press. So, yeah, like I think that when the good guys at least keep trying, that gives me hope. So to frame that in a positive way, I thought Japan's actions in the last couple of weeks were a positive.
Yeah, nice. There's some defense news from Australia too, redoing the fleet or changing the fleet to have some more drone ships, some more missile based. It seems like a smart move in that way. But anyway.
Seems like a smart move. I'll push back on that just a little. I think a lot of the things are smart in intention and direction for very sound reasons. I always, maybe it's just as I get older, I get more cynical in terms of the execution of those plans and the profligate waste that comes with it, which is another thing. But yes, I take your point.
Excellent. Well, let's get on to some. Well, what else are we seeing in the news? I guess what are some companies? Stealth was one that we'd had some questions about, actually, Andrew, and one that you'd covered before. Had a kind of a weird one where it got a wrap across the knuckles for. It seemed to be disclosing pre-audit financials in a meeting or in like an investor briefing that wasn't disclosed to market. I don't know if you had a look at that one.
I sure did. So disclosure, it's my biggest position. Had it for a while. Done really well, actually, but I was a little bit nervous in light of what we discussed last week with Ava's IR screw up.
AVA risk group.
Yeah, it's like this is not how you release and handle and manage good news. And we saw what sort of happened there. So then that's a big holding of mine. And then Stealth comes out and they have a presentation to Share Cafe the day before they release. I don't know if the results were already scheduled to come out the next day or if maybe they brought them forward. But either way, it's like, what were you thinking? What were you usually companies were just like, look, we know we're not going to say anything, but we just don't want to be in that situation. So they hold an investor presentation, but it wasn't just like general nervousness around maybe we should just say nothing, which would have been the smart. But they released, as you say, the pre-audit financial performance for the first half. Shares went very well after that. There's a small base, but nevertheless, a near 50% increase in net profit. 7.8% increase in revenue is what us shareholders wanted to sort of see. But it was sort of like, wait, and this wasn't even market sensitive.
The bizarre thing is, right, is this was a 50% uplift in earnings per share. I just wanted to chuck that in there. You can keep telling the story, Andrew, but everyone just hold in your mind how obviously significant it is that a low PE stock might get a 50% increase in earnings. Like if you're on a low PE ratio, which they were.
That's why the smart money, Claude, was in there early. But anyway, you've got to celebrate the victories to offset all the myriad of other losses. Yeah, so then they released the results the next day. The ASX, here's the other thing. Like the ASX, I was expecting an immediate please explain from the ASX. It's like, did we just get away with that? Did that just happen? And like no one said boo. And then the ASX did issue one, and I get the technical name. And they basically came out and said, well, look, we disclosed, basically our guidance in November during the AGM, which basically, any reasonable person could materially sort of, work out what it was likely to be, which there's a grain of truth to that. There absolutely is. Although, and again, I'm a fan, I'm a supporter here, but I would argue that pre-audit financial figures are a long way from guidance given at an AGM. And the more important point here is that you don't even need to get into the argument of whether it was or whether it wasn't, which was clearly material. But, it's beside the point. A good, sensible IR policy would just be to, don't hold an investor presentation the day before your results are going to be out. Like, don't do it. And if you are, don't release this kind of information. And then don't piss on my leg and tell me it's raining. Like it clearly was a blunder and a very obvious one. So, but unlike Ava, the shares are doing really well. Looking at it right now, 26 cents, right? So it's sort of like it hasn't seemed to have had the reaction it may have. So that looks like they got away with it. But just any small cap CEOs, boards, investor relations people listening, get it right, guys. Try a bit harder.
Yeah, fair enough.
Great result though. I'll say that.
Claude, what's been catching your eye? Anything on the small cap land that you've been digging into?
Well, I did want to chuck one in just this morning. Austco Healthcare enters a term sheet to acquire Amentco. So it's going to make another acquisition. So this is a little profitable micro cap that we have covered on A Rich Life in the past. I used to own it, but sold it just in time to make sure I didn't get any gains. But no, it's been on like a bit of a turnaround journey. I'd say the turnaround journey has been the last 5 years, really. And I think it's just a really interesting case study because, well, I mean, I'm definitely I feel like the turnaround's been missed at this point, but I just really do note, the things are pretty much quadrupled since the bottom. So it just goes to show that like these turnarounds do sometimes turn, and when they do, the returns can be pretty spectacular. So definitely a tough, lonely ride for the little the guy that's investing in a little microcap turnaround. But you do get the payoff sometimes. I think this is a success story. One that I almost prepared earlier, but didn't quite.
We talked about Austco. I've just searched it up. Episode 83 of Baby Giants.
Yeah, I probably said it was bad. I bet I said it.
Well, we reinvent the history that we want to believe, and my belief is that we were actually pretty positive. I know it wasn't Oscars. They had,
can listen to the episode to check.
No. Let's go with what we prefer to remember.
Yeah, let's just make it up. Like, never mind that everyone can go and check what we said.
No. Well, I remember I was on Osbiz sort of singing its praises, and I'll give a shout out to Winnie here, Luke Winchester. He put this one on my radar a while ago and picked the theme early. And I think you make an excellent point, Claude, is that actually Ian Castle had a great article on, I retweeted it actually just the other day. If anyone sees my thread, you'll see it there. But this idea of the edge you have with long-term investing, but when it comes to small caps, knowing that it's 2 years of nothing and then everything happens in a day kind of thing. So it is frustrating, but it is normal. And when the gains come, they can be pretty substantial. I mean, if something goes down even or sideways for 2 years and then doubles from your purchase price after 3 years, that's still a very great CAGR.
Yeah. Well, to be fair to myself, I have had the wisdom to not actually publish my own thoughts on Austco, but in fact, it's Benjamin Sayers who'd been covering it for us on A Rich Life. And he hit the straps with an article called Why Austco Healthcare Looks Interesting. That was in April 2023. And you can just look at a chart to see how well it's done since then. So, thanks again, Ben. I think everybody's ready for you to take over as editor, and I can just fall back to writer, I think.
Bloody Mary in hand and the beach within your gaze. Yeah,
I'm tapping out, guys. Some of the other guys are better than me. So,
but that's what they say, right? Like a good manager seeks to replace themselves. So
I've been trying as hard as I can. We just get the budget in place, and we'll do it. We're going to get better by having less of me.
That's a strategy I should employ, actually, how you say it.
All right. No, so that's Austco. Congrats to the fundamental investors in that one. But the one that I thought we could talk about today is a one that I have gotten at least somewhat right. XRF Scientific, which I own shares in, also I think falls into that category of sort of little profitable microcap. I wouldn't say it's a turnaround though. I think it's probably had more of just like a really clear, but they had a period of consolidation 5-10 years ago, but I think that they've had a really strong run recently. And I guess the big question is that running out of steam? So if we just take a look at the most recent results that came out, we see that the Q2 net profit before tax, because they do give us the quarterly and net profit before tax. Well, that was a record result. Now, we were expecting a record result, to be fair, because they generally have a strong December quarter. But I thought that, this was a good, strong record result. And we did need to see that after having a largely flat year. So now the big question will be whether they can keep it flat after bringing up the quarterly profit. Can they at least, maintain it at this run rate for the rest of the year? I think it'll be a bit of an ask as they get bigger. And, I do fear that I could have got to this story a little bit. This story could be getting a little bit long in the tooth. But the underlying demand drivers still seem to be there. So do you want to butt in and explain what they do actually, Andrew?
Yeah, I'm happy to. I mean, they're one of the top ranked stocks on Strawman, so I know it well. But they basically do sample testing for mines. Or more correctly, they sell the equipment that enables that to be done. So it's a nice little sort of pick and shovel kind of business for that industry. They've got a long history. They pay a dividend. They're profitable. They've had good growth. Vance, the CEO, is a really good operator. Yeah, I think that's the short version.
Basically, the news is that, I guess the longer term story is because their testing is involved with elemental analysis of iron ore, base metals, rare earths, mineral sands, cement, steel, and then also they do minerals and all sorts of different things. The idea is that they could potentially get diversified beyond mining. Right now, it's mining really driving growth. And I think that the sort of the new mines and the new types of battery minerals and all that kind of stuff, that is helping them as that becomes a bigger part of the commodities pie. But overall, essentially probably the concern in this result would be that the revenue growth was pretty low. Now that would have been somewhat hampered by the fact that the cost of their consumables has gone down, because their input costs have gone down and they pass that on to their customers whilst maintaining the same margin. So lithium is a huge input. As that has gone down, the price of their products their flux goes down, which is the consumable used in the analysis. But the profit margins stay the same. So they actually managed to get, versus the prior corresponding period, NPAT up 20% on revenue up just 6%. So your guess is as good as mine how long that kind of situation can persist. But, generally speaking, it's a bit rare to see that. But having said that, I think I've just touched on like that consumable side of the business has been, that's had a clear run of growth for 1, 2, 3, 7 halves now, so that's pretty impressive. The more sort of one-off, less recurring in nature segments, so the precious metal segments, so like platinum crucibles and stuff like that, and the capital equipment, like the various different machines, they can be much more variable. Now the capital equipment, they both were down slightly on the immediately preceding half, and the capital equipment one, they said that there was 1.1 million of Orbis mining revenue delayed, which means that they're expecting to have a strong half in the second half. And on top of that, they say, quote, I pulled it out, basically that, I've lost the quote, sorry, mate, but basically, they said the order book is at record levels with production for some products booked out past to a second half 2024, despite production capacity increasing. So that means I'm hoping that we're going to have a stronger second half. And look, if this gets a stronger second half, I think we're laughing. They did 3.3 earnings per share in the first half. 3.3 cents. Look, if we just said they just kept it flat, that would be 6.6 cents for the full year. The share price is about $1.14. So that works out at a FY 2024 PE ratio of around 17.3. So yeah, that's why I own it, even after these results, owned it before these results. But we'll definitely continue to stay on this story.
Did they mention it looks like the industrial kind of demand in Europe might have been a bit weaker particularly for precious metals? Is that kind of just reflecting like a slowdown or recession type stuff in Europe?
It may well be, Matt. I don't know. They didn't do an earnings call, which always kind of
okay, cool.
Which kind of always irks me. So I didn't get to ask any of those kind of questions. But at the same time, the CEO has always been super responsive when I have emailed him. So I'm sure that we could follow up and find answers to those questions in due course. So, but yeah, it was Germany, like the German office in there, the precious metals, it struggled. And actually maybe you've highlighted risk there, because if that's more macro related, the company's expectation is that's going to stabilize and bounce back, right? But if it's actually more macro related and it's more of a trend thing, then what we might see is that the actual results are going to come in below what the company itself thinks. And then for operating leverage businesses, when demand comes in below expectations, you do tend to take a hit to profit because the companies inevitably haven't cut costs. So margins fall. So I think that's a bit of a risk. And I think that's probably the argument that I'd be thinking about whether I would, reduce my view of the business. But right now, I think that it's steady as she goes.
Yeah, I've just been kind of thinking in Europe, there's another company that I was looking at or tracking results of in New Zealand called ScalaUp. I don't own it, but was looking at that one, and that had weakness in kind of industrial production and agricultural production, and in Europe was kind of a factor. And I guess it's just kind of reminding that we think a lot about the US for economic growth, where they've been still incredibly stimulative. Yeah, just reminding that like Japan's in a recession. It's just had its second quarter of negative GDP. I think the UK's in recession. Germany's Bundesbank has said that that's likely in recession right now. So I just think it's something to keep in mind, that there's like quite a mixed global economy at the moment, where you've got the US still powering like surprisingly strong. I think probably because they've had so much fiscal stimulus, big driver of that. And then you've kind of got a lot of the rest of the world that is actually looking pretty weak as they adapt to a lot of different things, war in Europe and higher interest rates kind of flowing through.
And a higher number of people out of the workforce for various reasons as well. I don't know if you've been following those news, but as in a lot of places in Europe, the number of people working has gone down as a result of, I guess, people bringing forward retirement who were maybe already at retirement age, but also, like people becoming too sick to work as well.
Yeah, that's interesting, Claude, because I think in the US it had bounced back a bit from how bad it was in, say, late 2021. So was the data like in Europe, it's still just really far down?
Yeah, so Europe isn't having the same levels of immigration as the US or indeed Australia, I think, as I understand it. So as a result of that, you actually have a bit of a shrinking workforce there, and often in a way that is problematic in terms of inflation, because it's not that they don't have enough Uber drivers. It's that, nurses and teachers, very similar as we are going to be seeing here and are already seeing here. Like there is a fundamental issue here in terms of if people think that inflation's going away. And I know I was so tongue in cheek when we were talking macro yesterday, but that's just because it's hard to call macro. But I just still think that there are definitely a lot of signs that inflation could be stickier than people think. And one of that is the fact that I think it doesn't matter what your overall unemployment or employment rate is if there is certain jobs that are really essential that you can't fill. And that if that's the case, you're going to start pushing up the prices for things, essentially, because that's the only way the market can really react. So
yeah, I agree. We've talked about it before, but we have this kind of generation of people going to unis instead of doing skilled jobs. Not that all uni jobs aren't skilled, but kind of the white collar uni jobs that you're not learning a specific thing versus tradies and nurses, doctors, and all these different things. And I think a lot of those are aging out, and that's kind of what we're seeing at the moment.
And then the other thing is, like, which I'm definitely more mindful of living in Canberra, is that you have like a class of people who are like very drastically overpaid based on like the new world we're in. Like 20 years service in the public service and climbing the power structures there gets you a very, very comfortable job indeed. But there's no shortage of those people. And everyone wants a job with like flex time and work from home sometimes when it's practical and, basically, job security, can't get fired even if you're incompetent kind of thing. Like, so that you have even just other office jobs, essentially. I think if we're going to see this shift where those jobs need to get paid less than somebody who builds houses or does the plumbing or like is going to come and fix your electricity after a storm or whatever it is. And I mean, let alone even just driving buses and trains and all of that kind of stuff as well. I think that those people all need to get paid more relative to the people who are like climb some hierarchy for 10 years, like pushing paper and doing like marketing on a management or whatever, like, or a financial analysis. Like, I very much fall into this category. Like, those people probably need to get paid less relative to the people that are like keeping things ticking over, essentially.
Yeah. And it'll be relatively, right? So to just probably have less.
Yeah. So that means inflation,
versus,
right?
Yeah, it does mean inflation.
Because no one's getting a pay cut. It just means that the salaries of the train driver or the boat pilot or whatever goes up. Who's learning to how, I've got one, I guess, long-time subscriber, I dare say even friend, but who, I think he's like one of the expert pilots who takes in huge ocean liners to the port and stuff like that.
Boat? Oh, he comes on the boat. Yeah.
No, I think he's the pilot who actually comes in and tells them exactly where to go. Like, and it's like a highly skilled profession, but, I think I know he mentioned to me at one point, they're not getting a new generation of people coming up that they need.
Yeah, it's like that across hundreds of professions, basically, where there's the skills just aren't being passed on because they're like, it's a job you need to learn on, hands-on, and they're just, because there's not that younger generation, they just haven't passed on the skills in a lot of these domains. You were smirking, Andrew? Did you have some thoughts on this?
I've got thoughts.
It's like, we are the useless class.
The market will clear, right? At a certain price, you get any job filled at a certain price. Right? I'll be out there cleaning any public toilet around for the right amount of money, and everyone has the right amount of money. I'm trying to think of the Winston Churchill quote. Everyone's got their price, but yeah, you kind of need to see that.
Everybody wants that lollipop lady job, I swear to God. Like, every 6 months it's in the news. How much do you get paid for holding the stop and go sign? I'm like, yeah, but how do you get that job? How do you get it? Like,
yeah,
I mean, politicking. You're an expert of like influence if you get that job. Just stand there listening to your iPod all day. Well, like 120K.
I just think there's a bit of a lag impact at play here where you've had prices run very strongly. I think it's like 15-18% above where they were on the CPI level over the last 3 years. I saw actually figures out today saying that average wage growth was 4.2% over the last 12 months, outpacing inflation. Hey, great news. It's kind of, prices have gone up, but you're all being paid more, so it doesn't matter. Yellen made the exact comment in the US a couple nights ago as well. But these prices haven't been lockstep in movement with the broader price of things, and I think people will be able, and given a very tight labour market, I think people will demand and will get higher wages, and that's going to be passed on wherever possible. And it's going to be higher prices. Like it's just, it's sort of like an inevitability to some degree. So yeah, I expect it. I think what we do is we look at these one figure, which is a very blunt figure, and within that we sort of have narratives around, well, there was a supply shock, and there was also wage push inflation, all this stuff, and it's kind of like, well, it's actually a little bit of all of that stuff. And I think when we got to the really crazy numbers, that was sort of everything happening at once in tandem, but most specifically the supply side of things, that's turned, right? And that's come down. And now everyone's going, hey, look, inflation's over. We beat it, which from the supply side of things was always going to come down anyway, because that's what markets do. But I don't know if we're getting back to a world anytime soon where it's sort of like anywhere near 2%, given that the latency that's in there with some of the wage impulses. So yeah, my version is that it'll be a higher for longer. Certainly we're past the peak, but higher for longer.
Yeah, be an interesting one to see unfold. I guess related to some of the cost of living pressures was some news with Woolies, which is down 9% as we record this on.
It's huge for Woolworths. I can never remember that big a fall. I mean, I'm sure there's a handful of times in its entire history, but that is a monster move.
And the CEO stepped down. You guys, was there an interview you're chatting about before?
Yeah. So this is gold. Everyone would have seen it by now, but the CEO, the former CEO, retired CEO, I should say, was being interviewed by, the ABC. And the ABC guy's just giving him a little bit of a pushback on his claims that the competition's really great. And as a prepared interviewer, the interviewer quotes a genuine authority and says former ACCC Commissioner Rod Sims said, quote here about how the competition is like very poor in Australia versus other countries. And the CEO of Woolworths, the retired CEO of Woolworths, is like, oh, that's wrong. I disagree with that or whatever. And then the interviewer comes back at him trying to finish this quote or whatever. And he goes, retired, by the way. And the look on his face is just gold. He thinks in that exact moment that he's just scored an absolute winner, by calling Rod Sims retired. And the interviewer's like, surely you're not impugning, Rod Sims because he retired 18 months ago. And then the Woolworths CEO's got it sitting there being and you can just see the cogs turning. And he's like, oh yeah, no, that wasn't actually the win that I thought it was. And then he goes, oh yeah, no. Yeah, I shouldn't have said that. Can we take that out? and then the interviewer's like, well, no, you're on the record and you said it. And then he's like, oh, yeah, well, I think I've had enough of this or whatever. And gets up to walk away. Before his PR people come over and obviously convince him to sit back down. And it was just absolutely gold, because here's this guy getting paid $7 million plus every a year. And he's there in the Woolworths checkout outfit, with the name tag Brad, as if he's scanning the veggies and as if he's so down to earth. And then the minute anyone tells him no, essentially, he wanted them to cut out what he said, and they were essentially well, no, you said it and we're on the record. And then he wanted to get off and walk off. And that just shows how this guy coped with somebody saying no to him. And as soon as I saw that, I tweeted about it, mocking it, and I was like, surely for $7 million a year, you can get a CEO who can tolerate the process of having a conversation with someone who disagrees with them when it's clearly part of their job to go forth and make your argument why Woolworths has a massive network. It's a bigger capital investment. Therefore, we need to have higher profits to get the same return on investment. So it's not fair for you to compare our margins with those in Germany or whatever. That's the rational argument you want to make. Instead, this guy's just tried to make the hit that other guy's retired, then he wants that cut out, and then he storms off and then comes back. Absolutely not unsurprising. He's since resigned. I think surely you can get better than that for $7 million.
I think it was in the works anyway, apparently, because the search for a CEO has been underway. I don't know. Who knows? Who knows what's gone behind closed doors? But it was a disaster of an interview. I don't know if I buy that argument, by the way, because I had a look this morning. I haven't looked at Woolies in forever, but so overall their group margins shrunk. EBIT was up 3.3% on a 4.5% lift in sales.
My position's nuanced, by the way. I'm not actually saying I think it makes sense to have this witch hunt against Woolworths. I don't. I just think that, the behavior of someone who cannot hide the disgust at being told no is very, very amusing.
Actually, as a more general point, I totally agree, because I I've encountered CEOs before who feel, that no, we don't want to talk about this or that. And I just feel like, well, it's your prerogative, but do you need me to like sort of be a bouncer for that? Like, why can't you just, as someone who's highly paid and hopefully highly competent, just say, I prefer not to answer that question. Anyway, so here's the thing though, when you look below the surface, Big W and Woolies New Zealand had a pretty terrible half, but they only account for 18% of sales. When you look at the Australian food segment, which is 72% of total sales, we saw a 1% lift in the gross margin. So it's nearly a 4% higher than it was a year ago. Now, again, I don't know if gouging is the right word here, but they're definitely flexing some pricing power. And as I said on Strawman, I guess that's one of the key planks to the bull case as well. Like I want a business that's able to do that. Moral objections aside, the ability that they have to do that is noteworthy. But it is hard for them to turn around and say, no, we haven't been. I'm interested in you elaborating a bit on the, just even if it's a straw man argument, but his rational defense of it, as you put it, because I look at it, I actually did a bit of Googling and found a McKinsey report from 2022 that looked at average US supermarkets. They have EBIT margins of 4% versus Woolies and Coles at around 6%. I don't get the geographic argument. I like at the end of the day, it's just like whatever your margin is whatever your margin is. You are profitable and viable at a 1% EBITDA margin. I'm not saying you should go for that. I'm not saying that's a reasonable one, but to say that we need to be more profitable, I don't get. And I just think, call it for what it is. You've got incredible pricing power. Well done to you. But you increased your gross margins in supermarket by 1% over this period with massive inflation, et cetera, and you're a good 2/3 above what similar businesses do in the US. So it's hard to sort of say that they're not enjoying some market power there. And very quickly, my remedy for it is don't regulate. Do not regulate. Because the trouble is you have this really ironic situation where the regulation, all it does is entrench the incumbency power. Because there's a massive regulatory moat that they have the resourcing to sort of jump through all the hurdles on, and everyone else finds it incredibly difficult to get into. So I would say do whatever you can to foster competition. That's usually the answer to high prices.
Yeah, just help Aldi do delivery.
Yeah, basically, yeah, totally.
Why don't governments more often just be like, I'll make a sub-economic like investment? Like, what about if you just said, oh,
hey,
Aldi,
that's my tax money. Back off.
We'll lend you money to expand in Australia at a slightly reduced rate. Like that would be a fun way to
yeah, I'd be nervous of the pendulum going in that direction too, to be honest.
I'm sure it opens. It could easily be super corrupt as well. Like that.
That's the problem.
I encourage that kind of
just
thing.
Poor allocation of capital and corruption is
it's like in Australia before long it'd be like your like mate's company that he just started yesterday getting a loan to buy a coal mine or something.
So give me the argument. How would Woolies argue that they need to have a 6% EBIT margin when comparables in similar markets have far lower? Genuine question, by the way.
I'm not making that argument so much. I would basically say, if I were trying to make that argument for Woolworths, I'd say, these are just our margins now. It's a cycle. We've had a good run. It's going to go back down. Can't you see even in the last results it went down? Like you're cherry picking our best result ever kind of thing is what I would say. But yeah, like. And they have a write down, right? Like that, don't they? Like they can be like, oh, you're just using you're ignoring that we lost all this money on things. This is the nature of business. We lose money here, we make money there. Like I'd sort of try and spin it like that rather than just like
walking off, having a tansy and walking off. Here's the other thing that was super interesting because these results and presentation materials all released today, obviously after the Four Corners interview, after the PR storm, all of that kind of stuff. I did a PDF. Just Control F on the presentation, and it's a 48-page presentation. The word margin appears 5 times in a results deck for Woolworths, and like I don't know. I feel as though they have done everything that they can to get away from any kind of overt mention of expanding margins, gross margins, especially within the food segment.
Yeah, it's an interesting one. I guess it's like the companies that complain or don't mention anti-competitive, or Google talks about how big its market is, right? That's kind of the thing it doesn't say, right? Like, so just not mentioning margins probably shows that it's quite a nice, cozy market.
Absolutely.
But also,
Absolutely.
any interest in Woolworths now after a 9% fall?
I kind of in two. On one hand, I look at this. I think Woolies is one of, again, sort of ethics aside, it's one of the highest quality businesses out there in terms of its defensive characteristics. I've got extraordinary confidence out of all the companies on the ASX. If I had to put a gun to my head that you've got to pick something that you know is going to be around in 10 years' time and more or less at kind of the same kind of economics, Woolies would probably be one of the ones right at the top of the list, right? But it is an extraordinarily mature business and it's trading at a P of, well, I don't know what today is, but yet prior to today, it was trading at a P of 20. So I kind of look at that and go, how does that possibly make any sense? On the other hand, I think, well, let's see, there's a 2.8% yield or so that's gone up a little bit. Add some franking credits in. You're not a mile away from what you might get at a term deposit. So if you're someone who sort of like the yield, if you're someone who thinks that interest rates are going down, if you love the defensive characteristics of this investment on the ASX as part of your portfolio, I think you can make an argument for it, especially if the North Star for you is, I want to protect my wealth. I will happily, if in 10 years hence, I get a total shareholder average return per year of 7.5%, that's not a disaster in very tumultuous, uncertain times. But if you're someone who likes 10% or more, then no, I wouldn't go near it.
The grossed up yield is about 4.5%, so that's like more or less in line with the interest rates at the moment. So I don't know.
Yep.
It's not a screaming opportunity. Okay, moving on. What else do we want to discuss?
I've got to run in like 5 minutes, so yeah, maybe we do some gratitude.
Let's do gratitude.
What do you guys got? What are you grateful for, Andrew? You've had
I'm grateful for the Bitcoin pump. I'll say that much.
No, you can't.
That's the same as last week.
I thought I was grateful for something about real estate agents.
That's the only positive thing you've had in the last 4 weeks.
But I got to tell you, it's been a crappy couple of weeks. So
still got eyesight? How are your legs? Can you walk around?
Yeah, but not fast enough, Matt. That's the problem. You know what I mean? There's always I'm a glass half empty kind of guy.
Yeah, you're gonna have like a quarter, 3/4 empty.
And the glass is dirty as well, right? Like what's with that?
I've got one that just popped into my head. I'm grateful now that from our new house that we're moving to, I have like a good friend that lives 4 doors down, and our kids are similar age and everything on the same street. Like,
that's cool.
That's a really nice coincidence. So I'm grateful for that little bit of luck.
Nice one.
Yeah, that's cool, man. Grateful get to do what I love, investing. Like the wildness of earnings season, and it's in full swing at the moment. So I'll chuck that one in.
Matt's like thriving. He's like, prepared, pampered, ready to rock. I'm like drowning. Yeah.
All right. Andrew, think of something positive for next week. Maybe we'll wrap it there. In the meantime,
right.
Hit us up on Twitter @BabyGiantsPod. And until next time, thanks for listening.
Thanks for listening, everyone.